What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some expectations for this upcoming week, what might cause some volatility in the stock price, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So this upcoming week is going to be largely impacted by data. So we have a lot of big stuff coming out this week. Not so much on Monday. So Monday is going to be more of a technical driven day. So I'll go over SoFi's technicals near the end of the video. But for the finance sector, I feel like the market's going to be digesting what came out after hours on Friday, and that was this. So Trump wanting to cap credit card interest to 10%. So that would be kind of impactful. I know a lot of people are having a debate over the weekend about this, and in my opinion, it is going to be quite detrimental to a lot of companies, and ultimately it's going to result in a increase in competition. It's going to largely be based on kind of member loyalty, and I feel like in SoFi's case it should do fairly well, but there's a lot of companies that might not. So again, there might be some increased volatility because of that in the finance and fintech sector. But moving on Tuesday, we do have ADP employment as well as CPI, and based on the most recent FOMC minutes and a couple of Fed speakers, supposedly now inflation is a top priority. Previously, it was labor and housing, so that was a little bit more of a pivot, but nonetheless, with CPI coming out, that could cause some volatility. So both of those are coming out before the bell. Aside from that, on Wednesday, we do have PPI retail sales and existing home sales. As well, on Wednesday, we do have this. So the market on Friday was kind of holding its breath because of the Supreme Court ruling. And unfortunately, they didn't give a decision. Rather, they pushed it to January the 14th. So similarly, you might see some institutions kind of holding their breath, not really doing that much, because this could be potentially detrimental as well to the broader market. So that is going to be coming out on the 14th, so on Wednesday. Aside from that, on Thursday, we do have initial jobless claims, a couple manufacturing data points, so that again could cause some volatility. And I feel like no matter what, throughout this whole week, the market's already written off a January cut. So all of this will most likely be impacting Marches, because even a lot of the key data that came out last week, it wasn't really moving the January data or the expectations all that much. It was rather moving March. So I feel like the market has now kind of pivoted as well to believe that March, I think it's 15th or whatever, 18th, that's when the next Fed meeting is. That's when we'll be getting a 25 basis point cut. And so something as well just to keep in mind. And then finally on Friday, we just have a couple of manufacturing data points. Companies unveiling the earnings. So we have banks kicking off earnings season. And this could cause as well some volatility depending on how they give future guidance and how they really portray kind of consumers at the end of the day. So this, we have a couple big names. So JPM, we also have Citi, Bank of America, BlackRock, and many others. So this could cause some volatility in the broader market as well as the kind of finance sector. Specific to SoFi, there really isn't anything planned. So no fireside chats, nothing along those lines. Potentially, we could be getting a couple new analyst ratings as well. Because of course that makes perfect sense for analysts to give ratings a couple weeks prior to SoFi's earnings, but it happens all the time in SoFi's case, of course. Looking at shorts, so going into this upcoming week, 9.7% of the free float is being shorted, works out to be 121 million shares overall are being shorted. Both the average and the minimum are positive, as well as shares on loan. So there is, as of right now, no sketchiness occurring. So previously we did see some signs of naked shorting and many other things, and plus it kind of as well looks very eerily similar. So when the whole naked shorting did start, right before that, we did have on December the 5th a massive amount of FTDs, 1.1 million. So again, there's a lot of correlation. So this neon kind of bar right here, those are all FTDs. So again, something to keep in mind. Looking at options from a bull standpoint, you see a consensus for it to be roughly around that 29 to 29.50 or even 30 for this upcoming week. Bears are anticipating for it to be pretty much 26 to 26.50. So definitely there is a lot more upside. There was a good amount in open interest. So we had 11,000 at the 27, 5,000 at the 26.50, and 3,000 at the 26. From some transactions that we did see both on the secondary market and also the dark pool, it is fair to assume that market makers already covered that. So again, something just to kind of keep in mind, that you might not be seeing any gamma squeeze or anything. Looking into this upcoming week though, it is a monthly chain, and it's could be a doozy if things start to really heat up, and if it gets to, let's say, that 30, we have 48,000 at the 30, 26,000 at the 27, 48,000 at the 25. Those are the big ones. So if SoFi for whatever reason is able to get close to that 30, then you could definitely see a nice gamma squeeze going into the following week, if that kind of makes sense. With it closing at 27.40 though, it is trading between this R1 and the pivot. So 27.26 is going to be a strong support, followed by 25.25, 29.26, and 30.50 is going to be the next strong target / resistance points. As I mentioned, Monday, as well as a couple of other days, it's going to be largely based on technicals. So in SoFi's case, it's kind of hit and miss. So you can kind of see from the market position, there is a lot of good willing buyers up until around that 25.90 range. But we do see right now it's wedge bound between that 50 and 100-day moving average. So there is going to be a pinch sometime this week. And like I said, it's going to be largely linked to the data. So depending on, for instance, how CPI comes out, or let's say the Supreme Court ruling, that could really push it above that 50-day moving average, causing a nice kind of rally in SoFi's case, or it could really break it down below that 100-day moving average. Luckily enough, in SoFi's case, every time things look very grim, just SoFi and institutions buy the dip, it caused a nice V-shaped recovery. It's happened time and time again. Last couple of trading days though, it's really tested it, and institutions luckily enough have come and still bought the dip. But eventually it comes a time when retail and institutions just say no more, or they either run out of money, if that's even possible. But definitely this week we are going to see some extreme move, either higher or lower, and again, it's going to come down to the data. So let me know your thoughts on that. Stochastic RSI is at around 50.48. And so it is neutral, so it's not really overbought nor oversold. So it's kind of stuck in the middle. So something as well just to keep in mind. These are some of the most recent ratings. So we did have KBW, Bank of America. All the bears ultimately did come out over the last week or so, week and a half. So don't be surprised if you see some counter bulls maybe coming out to give some bullish ratings, but still, we'll have to wait and see. So it's a fun ride, as I've always said. Sometimes it's very difficult to catch the highs as well as the lows. Best thing that you can do is just dollar cost average. So let me know your thoughts on SoFi. Where do you realistically see things going? Are you bullish? Are you bearish? In my opinion, I do believe that a lot of the data is going to be coming in positive. You might see initially some volatility. That's only because the market hasn't fully realized that a January cut is out of reach. And once they come to that realization, then we'll actually take positive data positively. I know that sounds extremely stupid, but the market's been acting dumb largely since 2024, and that's just because we want either on par or negative data. We don't like positive data. We don't want to be positive at all, because then why would we justify a rate cut? Market is very fixated on rate cuts right now. So given all that, I do believe that we should be somewhere between this R2 and this R1, so between 30.50 and 29.26. Again, things could go flip side and really go south if this 27.26 or even 25.25 support levels do fail to hold. Then you could see some further consolidation. On Friday, this pivot point 27.26 was kind of the saving grace, because on Friday the low was 27.23. So something again just to keep in mind. So where do you see things going? Are you bullish, bearish? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Definitely worthwhile to pop over there and check that out. With all that said, appreciate all you watching.